Welcome to What's in Store with Carly and Chris, the show where we cover hot topics at the cross-section of retail and real estate. I'm Carly Iacono, and I'm joined by my co-host, Chris Ressa. Chris, good morning. How are you?
Good morning. I'm great. How are you?
I am doing well. Are you in full summer mode, or are you still in cranking out deals and getting everything done?
So if summer mode means like off on vacation and taking a reset, definitely not. If summer mode means like having, enjoying a change of weather and outdoor activities, sure. But leaving ICSC Vegas with a full plate of to-dos, no doubt.
I completely agree. I feel like it should still be the end of May, and somehow it's already middle of June.
Right.
A lot to do. So
yes,
hopefully everybody else does not go on vacation, because we have a lot we got to accomplish in the next few months.
For sure.
So today's episode is kind of a fun one because we are testing our predictions. Now, we make a lot of predictions. The real estate industry at large makes a lot of predictions. I like to think usually we're right, but not always.
Right.
Not always, as we're going to see today. So every once in a while, I think we have to hit pause and say, hold on, where do we get it right?
Right.
And what maybe is not coming true as a look back. So before we get into industry predictions from 24 to 25, why don't we just start with ICSC? Our last episode, we made 3 very clear, very bold predictions on what we would both be talking about in our meetings.
Yes.
Do you remember what they were?
Tariffs, 1.
Right. AI, 2.
Yep.
Supply and demand, 3.
Correct.
Those, we were very confident were going to dominate our meeting discussions. I think we got about, a third right.
Yes.
What do you think?
I think 1.
1 out of 3.
Yes.
We nailed 1 out of 3.
Yes. So I if there was a tariff conversation, it was because I brought it up. In general, I was pretty shocked. Shocked's the wrong word. I was pleasantly surprised, but in general, most retailers were talking about that at the moment, tariffs weren't negatively impacting expansion plans. And that was exciting to hear. And therefore, it wasn't like a point of discussion a lot. They didn't talk about, with anybody, a ton of AI. And I've personally really started to ramp up my usage and research on AI. I'm reading a book, The AI-Driven Leader, right now.
Ooh.
I am playing with AI tools daily to get myself, really educated and understanding. But it wasn't really a topic of discussion. I think there's so much appetite to grow businesses with, and the need of counterparties to do that's what the focus was at the ICSC, for at least in the discussions I had. And on the supply and demand, that was a discussion that happened a lot, where there's not a lot of supply. There's still robust demand for retail space in America. And that got brought up a lot because people are trying to be innovative to access space.
Right. I couldn't agree more. Tariffs did not come up. I thought that would be an investor discussion as we talk about tenant credit, but I think there's just too much instability, right? The tariffs are on, they're off, they're 30%, they're 100%. Can the retailers compensate? Can they not? Can they shift production? There's so many variables that I didn't see a direct connection with the types of deals that investors were willing to look at because of the impact or potential impact of tariffs. So it was not a discussion point. AI, although very interesting, also didn't come up in the conversation at all. Maybe there were some good sessions that you and I didn't attend on AI.
I'm sure there was.
Right, because we were in meetings. I'm sure there were good conversations, but it was not part of our client meetings whatsoever. Supply and demand, though, that was a huge one in all of my meetings as we look at the inventory on market, and then we talked investment strategy. I think that was actually the core of most meetings was, what does the market look like? Which way do we think supply and demand is shifting, and how do we capitalize on that, whether it was a buyer or a seller? So we got one right.
Yeah, and a lot of my meetings were, how do we do more together?
Right.
And the ones we're working on, how do we figure out how to make it work easier, faster? So it was like a very focused on, on both parties trying to grow their respective businesses, which to me was super refreshing.
I think so. There was definitely an emphasis on figuring out a way to get deals done.
For sure.
Clients want to put capital out. We know tenants want to expand. Sellers are ready to trim assets that they don't want to own anymore and move on. I think everyone's really done waiting and trying to figure out how to make things work. So it was good. It was productive. Sounds like it was for you too.
For sure.
Nice. All right, let's talk about 24 to 25 predictions. So at the end of 24, there were a lot of big themes, not just you and I, right? Big themes across the industry that everyone was expecting to be the focus for 2025.
Right.
And I think just like our ICSC predictions, some are coming true and some are spot on and some were a miss. So let's go through the big categories and we're just going to kind of take stock on where the industry is now as it relates to our last year predictions. So why don't we start with, since we just touched on it, tight supply and demand, right? We had historically low vacancy at the end of 24. We have tenants still wanting to expand. I've got my opinions, but why don't you jump in? How has supply and demand kind of come true or not for the first half of 25?
Yeah, I think everyone was talking about that supply and demand. The supply was super low and demand was super high. And I think that even with some headline news around some tenant closures, that's still the case today. And that was the discussion we had in ICSC at Las Vegas. And that remains true. What I think is going to be interesting and what that does to rent growth long term. Mm-hmm. A lot of economic analysis is talking about that. There's no doubt that that's going to translate into higher rent growth over time. And so I think it's a longer term prediction of, when does and what does that growth look like? We're seeing rent growth today, but I think, some of the predictions are some sustained rent growth over time due to that supply and demand imbalance. And so we'll see if that, what happens there. But in general, I think, everyone, too much would have had to have gone wrong for the supply and demand pendulum to shift dramatically because vacancy rates were so low in America.
Now, I will point out, though, to be a bit contrarian, that availability has ticked up for the first time in, I believe, 10 years, the last 2 quarters. But it's so minor, such a minor shift, right? We're still at historically low vacancy levels, but there was a slight uptick in availability. So that's worth noting or watching. I don't think it changes the story, but I'd be remiss not to point that out. And I also think there's a discussion around obsolete retail, right? Which we can talk about as we go through the show, but some retail being taken offline for repurposing. Right. So that is also keeping that vacancy level and availability level extremely low because some of the square footage is being repurposed entirely. So
totally
more to the picture, but I think that the bottom line is that the tenant demand is still there and there has not been widespread vacancies, even though we've seen some notable bankruptcies.
For sure.
All right. So that one is spot on. And do you think that's going to continue the rest of the year?
For 2025, yes.
Yeah.
Yeah, for sure.
26, we'll save those predictions
for a few months.
Yeah, exactly. The next thing that everyone was talking about was just the nature of retail, right? So for years, we've been talking about experiential retail and omni-channel. Those are 2 very overused buzzwords in our industry, right? Very different. So experiential was every consumer wants to go in and they want it to be, just this amazing experience that they can't get online. That's why they're going to the store. An omni-channel is everything is completely integrated. We've got an online presence, a store presence, we've got distribution. It's all one neat package that we're, delivering to the consumer in this seamless experience. So why don't we start with experiential? Do you think that has shifted in the focus for 25? I feel that it has a bit.
I think retailers are trying to always create a better experience in their store. So if that's the case, then I think it holds true. But I think when people like, and you read headline news, or we're talking about like experiential retailing, I think they're talking about something that on like some grand scale, right? And I don't know that I'm seeing a ton of like this stuff that's happening on a grand scale, but when I think of it, like creating a better experience, every retailer is trying to do that. I think it means different things to other retailers.
Well, I think that's exactly it. I think of experiential and I almost think of entertainment, right? Which is maybe a leap, right? Like a Netflix opening their experiential concept where you go in and interact with the brands. What you're saying is retailers are still improving their store experience, but that doesn't necessarily mean, to me, when you walk into a Target, that it's this new experiential, experience, for lack of a better word, for the consumer, right? It's just, maybe it's smoother, it's more seamless than shopping. Maybe they can find that high volume items faster, right? It's just a better store experience. But to me, that's different than experiential retail as it was discussed.
Yeah, I agree. And like, I think when I think of the next place I go is like, okay, if we're talking about like a different, rather than creating a better experience for retailers, or retailers creating a better experience for consumers, we're talking about like a new category of retailing, like experiential retailing, that is this, entertainment venue that also sells some products and has, takes things that are, sports and makes them into retail concepts and things like this. So if we're talking that, I would say, the biggest growth has probably been the pickleball category, if that's in the experiential retailing category. Where I tend to go is a little bit more a step removed on the from the owner, developer, and landlord side of like the type of property it is. And where I go is this balance between experiential versus convenience. And what we end up really talking about there is like dwell time. Mm-hmm. Experiential is like trying to keep people on property for a significant amount of time, whereas convenience retail is oftentimes trying to get people in and out as quickly as possible. And are there properties that can have a blend of these? Are there properties that have some tenants that do one, a couple tenants that do another? And what does that look like? And how does the consumer think about that? Is kind of where my head goes when I'm thinking about it.
I've seen a lot more conversation on the efficiency, right? And the shopping experience, maybe the second category that you just talked about, with how do we get the consumer in? How do we have them make their purchase and get out? So it's a frictionless shopping experience, instead of how do we get them in and have them look at all the vacuum cleaners and test them, right? To me, that would be an experiential concept. You go in and you try all the vacuums. Maybe there's a showroom and you're actually vacuuming up something, versus you're doing your online research and you come in and buy the vacuum that you want and you leave. I think the second category has been a lot more prevalent for the first half of 25, of how do we make the shopping experience efficient, not experiential.
Yeah, that's probably true. I think the other piece of that, right, when you're thinking about experiential, are all these things that the landlord can do with the asset to increase dwell time, like how much green space can we add, and how much how pedestrian friendly can we change this into, right? A lot of shopping centers are built to be much more vehicular friendly than they are pedestrian friendly. And do we want to make changes to that? Well, one of the things that I think slows the growth of that is that there's big costs in those things to do that. And then some of these experiential concepts that are on a grand scale, like you mentioned Netflix and things like this, are high cost. And some of the ROI is a prediction and unknown, where traditional retail has like a long history and a lot of empirical data, coupled with the fact that if you enhance the actual experience in that store, like you could have and making it more convenient, it might not. It might mean to do something else to keep them on property longer. But I think it just augments the chance of success. So I think that's probably why you haven't seen as much of that.
Could have to do with the vacancy level too, because
There's not a lot.
If you don't have to extend yourself as a landlord, or you don't have to put the extra TI money in, or maybe take the risk on a new concept, maybe you're not inclined to.
Or there's new concepts that can't find space.
Well, that too.
Right.
That too. So this might shift if the vacancy level changes or the market dynamics shift.
Potentially.
We'll see.
Omnichannel.
So different, but I feel like there was a period of time, probably even before 2004, that everything we were talking about was omnichannel. How is the retailer's online presence seamlessly integrating with their storefront? Because we know everyone needs both for the most part. Now I feel like that is less of a discussion and it's just an assumption, right? Everybody's omnichannel. Maybe you have online purchasing, maybe you don't, but every company, really with very few exceptions, has an online presence. They have a lot of cases, a buy online, pick up in store that's just become so common that I feel it's not a discussion point or a push anymore because it's almost universal.
Yeah. If you look at any company that has some level of scale, I don't know what to peg it. Call it, north of $20 million in revenue. Just let's call that some level of scale. Some might say that's not, they probably don't, or maybe they do. Let's call that. If you're physical retailer at that level, you probably have some e-commerce. And if you're e-commerce, you might have some physical store presence as well. Maybe it's slightly more, but there's some number where at that point you have both.
Mm-hmm.
And I think the number used to be, I don't know what the number was, but, or what it is today. But I think if you you just looked and you went on Google and were e-commerce companies, pure play, they only sell online, that aren't just me and a buddy who wanted to open up an online t-shirt shop that made a couple bucks. If you take that out and you have some level of scale, I think most have some level of both right now.
I agree. So it's not that it was a misprediction. I think it's just come true and kind of fallen off the discussion because it's assumed.
Yeah, I think still today, value is really hard. Giving immense value is really hard to do online.
Mm-hmm.
There's still some value retailers that have a minimal or no online presence because the financials don't make sense to do so. So that'll be interesting to see how it plays out over time.
Agreed. All right, let's move to one that we're really not hearing much about. So this, I think, was maybe a miss in predictions, and that is sustainability and ESG initiatives.
Yeah, I mean, as it relates to the real estate, there's so many different things you can do and say, what is sustainability in real estate, right? You could do things from with the physical plant, the water, the landscaping, energy, all these different things. I would say it was super front and center and had to be in things previously. And I think now it's market by market. There's some markets where it's, really expected. Right. But generally speaking, it's not the driving force, at least that some, headline news or pundits said it would be in 25 from a physical real estate perspective. I don't think. It's still out there, no doubt. People want us to, figure out the going green movement. I think that's, true. And, but as it relates to the driving force behind business deals, I'm not sure it is right now, but
I haven't seen it come up. It definitely has not been a conversation topic from the investor side.
Right.
How sustainable is this company? How sustainable is their build out? I don't think I've ever heard that once. And I wonder from the tenant and the corporate side, the occupier side, is it kind of on the back burner because costs have been so high? Inflation, space is hard to find. There's these other challenges, so it just hasn't come up. It almost feels like it would be nice. And I think everyone feels that this is a good idea, at least I hope, right? For the most part, let's save the planet. I think that's kind of universal, we would hope. But how does it fit into the business piece? And it feels like it's pretty low on the list of things to focus on right now. So maybe that changes if, the economy shifts. We'll see.
We'll see.
All right, next one, repurposing. There was a lot of talk about redevelopment. I think that is not been played out to the scale that was predicted, but that's because, again, I think the lack of vacancy. So when I say redevelopment, I'm thinking more complete repurposing of an asset, not re-tenanting, because we know if there's vacancy, it's being filled pretty quickly as long as it's not obsolete.
So as a way to define this, zone change.
It's a good way to define it.
Okay. It's going from retail to office or office to multifamily, multifamily to industrial, zone change.
Right. And that was a big topic, especially with the, class B and C malls that were struggling for a time. Some have been repurposed and, maybe you see it more with specific property types and very limited markets. But broadly, I haven't seen this be a big discussion. You?
I would say something that continues to be a discussion that is hard to get right is mixed use. And so I still hear about mixed use. I think total repurposing. I think the discussions talking about and things are in the works. I think the miss was probably like, how quickly could it make it happen? I think there will be things repurposed. Markets have shifted in a way, and migratory patterns and things have shifted in a way that are going to force repurposing of physical plant real estate. I just think that it takes longer than might be expected for a lot of reasons. Costs, approvals, and I think the other thing, costs and approvals and a bunch of other reasons, but mixed use is definitely one that's like really hot. It's been like pretty hot for a while, in my opinion. I think it's really tough for so many reasons. You have approvals, you have businesses that are stepping into it that it's unique for. This is the first time they're doing it, or it's non-prototypical for what they do. And I'm not just talking about the retailer. It could be an office. It could be whatever. You have now you're bringing these residential apartments into a place that, and the tenant living there hasn't lived in a place like this before. And then you have the piece that most real estate owners, developers, operators are asset class specific. And so you have have other people, there's a lot of partnership, and the way you salami up the dirt to like, we're going to sell this piece off and sell this piece off, it makes it complicated. And I think that's part of it. But this new wave of mixed use, at least the discussion and trying to make it work hasn't stopped yet.
I think I've seen a lot of very pretty renderings. Getting the projects to completion is difficult, to your point.
Sure.
And it is very diverse expertise that's required, along with all of the towning planship, right? Because you're trying to make an area densified or maybe more walkable. Like, you're really changing the character of that piece of property significantly. So making all those public and private figures come together with the same vision, the same cost, the same budget, the timelines, it's very difficult. So I think you put it right, that it's not that this is no longer a discussion point. It's just moving slower and perhaps a little more difficult, but it's still in the works.
For sure.
Okay, fair. Let's move on to food and beverage. So there's been a lot of discussion about new food concepts, new coffee concepts, some new grocers, right? This heightened focus on food and beverage retailers. And the growth exploding. People are cooking less at home, whatever is the driver of it. Do you think that has come true in 2025? Is that still a big push?
From an anecdotal perspective, yes.
Okay.
Yes.
That's it? Just a yeah? I never get just a yes. What? Who are you?
Yes, I think so. Generally speaking, the consumer's eating home less. I think, like, we just got a new grill. and we're excited about it. We got a Traeger.
Congrats.
Thank you. And so we're going to be cooking home on the Traeger. So that's a grocery shop versus a QSR or a restaurant. But I think, so grocers are expanding. I think that the food and beverage concepts are definitely expanding. It's no secret. If you look at like the limited new construction that's going on, a lot of it is definitely
feels like it's all coffee. Actually, that's all that's being built concepts in the U.S. is single tenant coffee. No, I do think to that point, though, coffee sales are one of the categories that are up, and I wonder if it's the new entrance into the market. Just they're creating more market share. It's not that individually we're now drinking twice as much coffee, but maybe we're making it at home and now we're going out to purchase coffee. But I know that category specifically has been just exploding.
Yeah.
The full service is down,
consumables, though. The consumables market is clearly just an interesting market to be in for sure. Whether it's coffee, whether it is, donuts, steak, donuts, healthy. Like, one of the things I find interesting is regardless of the trends that at least show up on any person's Instagram feed, regardless of the trends, there's room for most concepts that like we're consuming, right? If like, I was in a chat the other day where someone was like, anyone have the new peanut butter and jelly Reese's yet? And so, whereas at the same time, I'm in a chat where someone's talking about like, there's this new gluten-free restaurant that opened up.
Right.
So I think no matter where you sit on the...
You can be part of both chats, right? I think I'd be part of both chats.
Yes. And so no matter where you sit, it feels like this food and beverage category has just got a lot of tailwinds behind it and is getting, really ramping up. That said,
creative too.
That said, it's, the restaurant space is still one of the toughest businesses to make it in. So
I think traffic to full service restaurants was actually down for the first half of 2025. Some QSRs are up, some are down, but that's like pretty flat, pretty neutral. Coffee is up, but full service sit down dining was down, maybe 3%. I think it was right around there. So I don't know. Maybe that's cost, though. That could be, consumers being more cautious with spending. Not that they don't want to go to these places.
Yeah.
Could be a temporary.
It'd be interesting to see, like, as full service sit-down restaurants, the correlation between just that category and grocery sales.
Right. Or is fast food kind of sliding in? Are they just, trading down for their meal out? I don't know. We got to do more cross-referencing.
So you say fast food. I consider QSR and fast food very different.
Oh, I know. We did this conversation before. Okay.
So if you're talking about I don't think someone's going from the sit-down restaurant to traditional fast food.
But maybe they're stopping through Kava, right? Which you consider
QSR.
Okay.
Yeah. It's a quick service for sure.
Right. With no drive-through. Although some have drive-throughs now.
Yeah, I consider QSR. I would, I think I don't necessarily put it in fast casual, but it's in the QSR.
Okay.
So.
All right, we're going to get real technical if we go through there again. But food and beverage, still a hot topic, still expanding with some caveats for different formats.
Right.
All right, our last one was the focus on value. So 2024 brought, of course, another year of high inflation. Consumers have less spending power. Now we're halfway through, which is crazy, already 2025. I'm still seeing the focus on value retailers, and it seems like that's being reflected in the earnings that we've seen as well.
So I think value is always in vogue. I think that's value is always in vogue. Value retailers are exploding. They're doing well. But I think value retailing, they do well in good and bad times. I think the difference being is that they don't get on the covers of magazines, and I'm using it as an example, as much during the really great times. Okay. All the hot, new premium, high end does. But that doesn't mean they're not doing great during those times. I think value is always in vogue.
Consistent.
Yeah. It's just about execution. Are you a business that can deliver consistent value at scale time and time again? But value is always in vogue. People, like Americans, always, would love a deal. And I think value is always in vogue.
I do think certain segments are turning more to value, though, as their wallets tighten, as consumer spending pulls back. So there might be a bump. Yes, they were doing well before. Not to say that they're suddenly doing well now, but I think Dollar
that's
General's
the point I'm making. That's the point I'm making.
Earnings came out and they just blew it out of the park. Right, their stock jumped tremendously one day, and I think that's an example of certain consumers saying, "Okay, we've got to be really value conscious. We've got to shift spending to get the most out of every dollar." So perhaps they're excelling in this environment where they were always doing well, but this could be a nice boost in 25.
Totally.
Okay, fair enough. So we're going to keep focusing on value. Value's in vogue. Value will always be in vogue. It's very catchy. I like that. And that
I didn't say it, but it's not your quote. It's not my quote, but
okay,
I like it.
We won't quote you with this,
yes.
But it is a good line. Whoever said it, nice, catchy line. So that was definitely one for 24 that is playing out in 25.
For sure.
So I feel like for the most part, the 24 conversation is consistent with 25, with maybe just some aspirational things like sustainability and experiential and, some things around the fringes pulling back a bit in the conversation.
Yeah. What I would say about these is, and some of the things that some of our predictions that we normally do, these were, I think, is really good trend talk here. Mm-hmm. I think some of these are like for the industry, these are safer trends to talk about because it would be hard if we were talking about them in October of 2024, be hard for some of these to not play out in 2025.
Because it's been a short timeline?
Because they were all underway. They were under discussions. And so will it play? The ball was already moving. Yeah. The ball was already moving, right?
Yeah.
If it's different, if you're, to make a prediction of, that is a few steps removed from the ball being moving, right? Because, I don't know, we'll make one, because there's a lack of space, we are going to see significant M&A activity in order to grow, right? We said something like that. That I don't know that has played out this year, but where I think the chances of it playing out like how we probably described are probably low because, right, there's a lot of other factors that are going to play into that. Like what are the economics around monetary policy, fiscal policy, and what are the actual trends that are playing out in the following year? And if those things aren't in motion already, deals like that take a long time. So if they weren't in motion, it would be hard for it to be executing right now. So I think to the point that these are all great, but they were in motion.
They're near term.
Yeah.
So really where it would get interesting is if we start making predictions for 2027 or 28, are you saying we need to push out our timeline then?
So if you do that, a little
more challenging,
it'll be challenging and exciting if we do that.
All right. Well, maybe that's the next end of year episode. Instead of just looking a year ahead, we're going to start going way out.
3-year predictions.
See how that works. Okay.
Awesome.
We'll brainstorm. All right. That is a wrap. Good stuff. Love talking about 2024 to 25 predictions. I think to your point, most of them were pretty spot on.
Yeah, for sure.
To everyone listening, that was this month's episode of What's in Store with Carly and Chris. We're so happy you tuned in, and we look forward to seeing you again very soon. Have a great day, everyone.